Welcome back to the channel, Crypto Trend Trader with a morning market update. Today we're going to be taking a look at quite a few assets, everything from cryptocurrency to traditional markets. So we've got Bitcoin, Ethereum, Tezos, Dogecoin. We're looking at the 10-year treasury, DXY dollar index, gold, silver, TLRY, Tesla, and then all the major indexes as well. So I'm going to try to keep it relatively short, shooting for like a 30-minute video. We'll see how that works. So getting started here, I'm on the 4-hour. This is our Bitcoin chart. I'm going to switch over real quick actually. It's a daily Coinbase now we're looking at. And take a look at what's going on here. So we have, based on our moving averages, we have positive momentum to the upside. We have the 8 above the 21, the 50 and 55, 89 and 200s, all in a powerful uptrend. We just made a new all-time high yesterday once again, and we're just consolidating at that range. Always good to see some kind of sell-off, but nothing too powerful. So as far as I'm concerned right now, as long as we're maintaining above that 46,669, we basically broke the all-time high, came back down, consolidated on top of it, and should see continuation. We are in the bullish control zone based on the Jewel Thief, and we are in a powerful uptrend. Multiple green histograms in a row above the blue slope line, which means once again we are in a powerful uptrend on the daily. So now if we look at a shorter time frame on the 4-hour, we basically broke through, got an all-time high, came back down, tested the 21, consolidated above the 21, never lost it as support. As soon as we closed back above the 8, we got that powerful move back up, took out the previous all-time high, got a basically like sideways consolidation and then rejection. Once we see that red candle come in, it starts to look weak, come back down. So what we need to pay attention to now is, do we hold on top of this 8 moving average, or do we come back down to the 21 and test it again? If we come back down to the 21, we want to pay attention to, are we going to get the cross, or are we going to get a similar situation like this and then continuation? We do have to look here on the 4-hour. We are showing some weakness here on our indicator oscillators. Basically had a bunch of the red histograms in a row, sold down below the slope line, got back above it and kept it blue, but now we have multiple histograms in a row again, and we're potentially going to cross below it. If we stay below it too long, we're going to get it flipped over red to the downside, at which point in time we need to make sure that we stay above support, or else potentially we'll be looking at a more elongated correction. The obvious area that we would correct down to would be the 89 moving average down here, and that previous top at 40,100, or as high as 42,000, the previous top. But essentially we're just looking to sell back off if we do get a sell-off and find support at our previous resistance for a traditional SR flip. We do have the blue cross above the purple here, potentially going to get back into the bullish control zone. But what we're paying attention to also is the relative strength of these stochastics. So here it took less energy, here it took more energy. And when we used more energy, we got to a higher high. That's convergence between the indicator oscillators. As we're here, we have a lower high, and then we have a slightly higher high. And right now, nothing to get alarmed about just yet, but the oscillator is much lower than it was on the previous push up. So if we get this start rolling over and topping out, and we have a high here and then a lower high here, as opposed to here we have a lower high and then a higher high, that's going to start looking like divergence, and we need to be careful. Same with on our our oscillator here. Basically we have that high here, we have a much lower high, and we're showing weakness on it. If this starts to sell off again, we'll have a high, lower high, as opposed to a high, higher high. Once again, that's going to be clear divergence, at which point in time we could expect a potential sell-off. Nothing to get bearish about just yet, but potentially looking to continue buying on those, various support levels, whether it's moving averages or Fibonacci extensions. So next we'll go to Ethereum. Let's switch over to the daily again, start with the daily on Ethereum. What we're paying attention to here is, let's switch off the moving averages. We basically were operating inside of this tightening wedge here for quite some time, broke out to the upside, and then found support on it. So as long as we're consolidating above it, we would expect to get a break to the upside and potential measure move. But what I don't like about how this looks is typically when you get that breakout, you'll get a break, consolidation, and then, the measure move to the upside. So if we put that at the breakout point here, it's okay to see a slight consolidation after a breakout and retest, but we're not showing like any strength. We're basically just going sideways. So, 1957, about 2000 would be like the target for Ethereum to the upside. We basically bounced this area and found support continuation, but we're showing like, a couple greens, then a red, couple greens, then a red. Then, it goes from like a bunch of greens and one red to 2 greens and 1 red to 1 green and 1 red. So like if we start printing a second red here on the daily, it's going to start looking extremely weak and potentially like a sell-off. Also, when we left the bullish control zone here and got that hard sell, we got a pretty sizable sell-off. If we go from the top point to the bottom point, Ethereum had like a 33% drop basically. So if we look at a similar situation now, potentially lining up right here, we have this top here and then a lower high, and then essentially like same as we were just talking about price action, we have a higher high over here. So again, that's going to look like bearish divergence. And if we sell down out of this area, even if we don't get another 33% correction, even if we get like a 20 to 25%, from top to bottom, we're looking at basically coming back and retesting that previous high in yellow right here, which would be realistic, but that's going to be a breakdown from the channel. And that's only a 20% sell-off back down to like 1444. If we see another like 30+% come in, we're looking at essentially like a 1200 range. Now, again, I'm not saying that's necessarily going to happen, but these are our targets we're paying attention for. But, this is starting to look like what I would call a throw over. We're showing bearish divergence on the daily. Not getting that strength coming in, showing weakness after a breakout. We found and saved price action right here, but that's quite a bit of a wick to sell back in. Normally you would expect a breakout, find support, and then get a move up immediately. This looked like it was more likely to actually like show weakness and sell off, and then was saved at the last minute to protect someone's position. So this is not looking that powerful to me. Also, like a lot of the altcoins have been just pumping through the moon right now, and Ethereum is basically just kind of floating up, going sideways. So, I would look for a potential retracement down into this area if we don't start showing some serious strength on this thing in the near future. So, now next we have Tezos. This is just one I have a position in specifically from a breakout back at like this range right here. We broke out, came back, found support. So I'm paying attention now to, you know what? There was one more thing on Ethereum I wanted to look at, and that was our moving averages. If we break down from the moving average also, that's going to line up. The 21 would basically be the bottom of the range right here. It would be something to pay attention to. But again, we're in this powerful uptrend on that. So now Tezos, let's look at a little longer of a time frame right here. So basically what we're paying attention to is our previous all-time high was 450 basically, which is where we're at right now. We're retesting that high. We had previously sold off down to $1.58. So if we break out above this now, that's essentially like blue sky breakout. Definitely like could get a nice move off of that. And what we would be paying attention to is our Fibonacci extensions, which obviously we're at like the 1 right now because we're at our previous all-time high. But the 1.236 is all the way up here at $5.68. So, that's a nice move up from there, 25% move basically up. So paying attention to that. But, the main breakout for me was, when we took out this previous level right here, that looks like to me we're going to get a retest to the top. But, there were quite a few areas along the way, the crosses and everything like that you could potentially take a position in this. But, I'm just paying attention to it because this has been a relatively, underperforming asset in comparison to most others. So a lot of times people will look for something that hasn't broken out yet, for an opportunity, to catch those gains and transfer money from something that has already broken out and gotten a nice move into something that hasn't. Now we do have like a high, higher high, and then potentially like our next high would be up here at $5. So, nice round number and like slope line resistance. I think I had drawn this on the daily, so it doesn't quite line up, but that's something to pay attention to, that $5 range. And then depending when we float up here, that was like a low and then a multiple series of lows. So a lot of times you'll come up and break into that point again, which lines up basically again at that $5 mark. So I think that's a good area to start taking profits on. But this thing has had a powerful breakout from that $3.30 range up to $4.40. That's obviously already been a nice move. And, I'm obviously looking to lock in profits like 36%. No leverage on this one, but, at 30% or so, want to take some of your profits in here, especially if we see this thing come up to like that $5 range. That's over 50% increase, which is obviously nice. So, I always like to take some profits along the way, make sure we lock in those gains. But just something that I'm watching on this one. It's not that like popular, not that talked about or anything like that. But, it is one of those ones that's been sort of underperforming, which typically I don't look for underperformers. I'd rather go with like the strong ones. But the way the alt cycle works is people basically like shift out of a powerful one into a less powerful one, and then it gets its next like measure move gains or whatever, and then they'll just go on to the next one. It happens in traditional markets as well. So just looking at the 1.236 up here at 575 or the 1.5 potentially at 750, this thing really has room to run. And then like I said, with these previous this was a long time trending resistance that was upsloping, and then we broke down from it. So a lot of times what'll happen is you'll break out and come back and retest that. So that's going to put us at least at that $5 range. So still plenty of room for gains on this one. Something to pay attention to. So there we have Tezos. Let's do Dogecoin next. This thing was looking powerful, came back up, retested the all-time high. That's what we were just talking about with Tezos. Got the high, came back up, retested it, and then this has essentially failed to break out, but it's consolidating once again at a higher low. So we had that low. Let's turn off the moving averages again. I'm on the 4-hour right now. That was our low down here, another higher low, and then we came down to that same line again, found support as well. You could kind of shift this actually too. The way I had it in here before was kind of like a breakdown from it. You could have it a little more like that. But I don't necessarily think this is like a failure or anything like that. This to me looks more powerful. Like we didn't get a strong rejection right off it, but it looked like we were going to lose it and then we didn't. Looked like we were going to lose it and then we didn't. So, this thing looks like it's likely to come back up here and retest that high again. Potentially, get that breakout. This is really starting to look like an ascending triangle because we have a top, a lower bottom, a bottom, and then we have a higher bottom. And then we have a top again, and then we have another higher bottom. So we have 2 touch points on that top, all-time high. We have 1, 2, 3 touch points on the low, all-time high, since the all-time high rather. So, potentially we'd be looking to come back up here to at least that like 8.6, 9 cent mark. So I think 9 cents looks pretty probable right here. If you're going to just take a position out of this area right now, up to 9 cents, you're looking at basically like 25% plus move to the upside. So there's definitely some potential on this thing to make some gains here. Could we get rejected again? Could we dump right off here? For sure. But, another 25% move, just a little scalp move right there. Doesn't look bad. But we do have to pay attention to, we lost this slope line right here. It is flipped over red. We do have our Stokes pointed to the downside. Blue is below the purple. An interesting thing right here was when this started to lose support right here. I was paying attention to this when it started losing the moving averages and everything, and I thought this was kind of funny. It basically was selling down below the 21, potentially looking to cross bearishly to the downside right here, and this is when Elon Musk put out his tweet once again where he said bought some Doge for X, so now he's a toddler hodler. Which I thought was funny because that was like down here at the bottom of the sell. And then, Elon pushes it back up with his tweet, but it gets rejected. It basically fails and then just consolidates and keeps going. So the more times he tries to influence the markets, with his tweets and with his statuses and whatnot, the less powerful it's going to become. So, I thought that was important. Also, real quick, touching on Bitcoin, if you pay attention to, let's switch back and then we'll come back to Doge. If you pay attention to what happened with Bitcoin, now that we have a little more information, what it looks like is Tesla bought in the beginning of January. So it bought basically in like that 30,000 to like 30 to $40,000 range around here. So when we sold off here, that was like getting defended probably by them. And then when we sold off here, same again. This is like now we're like not in a profit position, potentially losing a key trend. So again, I don't know Elon does like technical analysis, but he sure did pick the perfect time to come back in here and step in with that tweet and then get that powerful move to the upside, because that was essentially Tesla's position being underwater. So I thought that was kind of funny that this was an Elon tweet right here, and then continuation once the actual market finds out and gets like the confirmed knowledge, that he did put that money in the balance sheet, we get the powerful move. So that was an Elon move. That was an Elon move right there. So now the real question is, are these moves going to be sustainable? So now, same thing with Doge. This one was not sustainable, but it's like he's abusing his power at this point in time, because it did consolidate, and then we did get the 821 cross to the downside. So if we can't get above this 8 moving average right now, we're going to get rejected and probably come down to one of these Fibonacci levels and see a powerful sell-off. So I don't think it's time to get overly bullish on this thing while the 8 and 21 are crossed to the downside. Although last time that happened, the exact same thing happened. The 821 crossed, we broke down from that support, and then we got a powerful move up. The 821 crossed, we broke down from that support. So now are we just going to get a powerful burst to the upside and put in an all-time high? One time is not a pattern, but it's definitely looking like very familiar. Now, granted, we didn't have the support line necessarily drawn previously, but once you have this and then the multiple bottoms and then the fake out breakout, that give you the time to put that in place and then see that move. So if it happens again now, we're looking at a clear pattern of what's going on here. So, but again, if we can't get above this 821 cross, and save the support off of the 55 here, I think our target's 5 cents, just above 5 cents. That's the 618, and that's also the 89 moving average. And then the 382 down here, would be 37 cents. But keep in mind though, that's actually like from, this is from our top to our bottom right here. You could also draw the same one from the bottom to the top, but it's essentially just the same move, but reverse Fibonacci. So. And all our targets to the upside are still in the same place. So we've got to be careful with this one, though. This is just going to do what everything else does. Maybe Elon will tweet and bust it back up to the upside. So now I just want to remind you, this is not financial advice. I'm not your financial advisors. Markets are extremely volatile. Please do your own research. Trade responsibly. Switching over to the 10-year daily. This is exactly what we talked about. We basically came back up here, got the rejection, sold back down, kept this slope line in place, that white slope line that we were paying attention to. Again, I'm going to turn off the moving averages. This thing has been basically operating our little channel to the upside. Got rejected, did exactly what I said, came down here and found support so far on that 0.5. This is our 0.5 Fibonacci level right here. So, what's going to happen now? Are we going to consolidate here and then break down? Or are we going to consolidate here and then get the move back up? To me, that's more likely, because typically when you're inside of a range, a channel, a pattern, you will stay in that range until the one time when you break down from it, which is why it's so important. If you sell resistance, buy support, buy support, buy support. It works until it doesn't. So there's so many times you can buy support and sell resistance until the one time when it doesn't work. So, it's trading with the trend. The trend right now is macro to the downside, but micro to the upside and inside this pattern. So I would expect this pattern to hold until it doesn't. We just put in a new high or retested the high. So what I would expect to happen is come down here, potentially even break down from this range or trade sideways. And then we put in a low, a high, a low, a higher low, and then same high, followed by a higher low, and then the break to the upside. But again, we could get that breakout to the downside right here. Definitely a possibility. But I think the over exuberance and some of the selling that we've seen in the markets is starting to tell us that there's definitely a possibility this bad boy could be moving to the upside. And then as far as our actual trend lines and everything, we spoke about this. We're above the 200 exponential and simple moving averages. They have a slope to the upside. The last time that happened was way back here. We lost the slope to the upside in price action and everything, back at the end of 2018, beginning of 2019. So, we're essentially like reversing a trend that's been going on for, beginning of 2019 to beginning of 2021. So 2 years we've been in a downtrend. And, I consider an uptrend once price action is above the 200 exponential and simple, and they're both sloped to the upside. So as far as I'm concerned, this is in an uptrend and will continue to, move to the upside until it doesn't. But as far as I'm concerned for now, Treasury is going to be moving higher. 10-year yields can be moving higher. Let's look at the dollar. So we've spoken about this quite a bit. It did exactly what we thought. Basically came down, find support on the midline of the channel. We've been operating inside of, this is exactly the opposite exactly the same as the Treasury, but opposite direction. We've been selling off inside this channel for a long time. Actually, it's like the same as the Treasury. I don't know what I'm talking about. Ignore that. That's since, March of 2020. Basically just been selling off inside this channel. Found quite a bit of, support at the bottom, resistance at the top, broke through the top, came back down, retested it as support, kind of broke down inside of it, but we're back outside of it. So, could you kind of move this channel a little bit and have it be a little more accurate? Yeah, you probably could. Maybe I was slightly off, and you treat this as the resistance, and then this was a breakout consolidation at the breakout point, and then we're going to get a powerful move. Looks very likely to me right now. That actually looks slightly better, with the support back here as well. So, I was probably just off a tiny bit on the angle of that channel, and it still looks like we're confirmed breakout of it. So we'll have to see. Are we going to consolidate here? Are we going to get a powerful move back to the upside? Our target's still back up here at like 95 cents. It's hard to think that the dollar would strengthen with how much money we're printing and, the new 1.8 trillion coming in and everything. But, these markets tend to do the opposite of what you think. So a lot of times things will be already priced in. And then you have to keep in mind there's so many like exponential factors too. Like, people need dollars to like settle. I was listening to something the other day and it was like over 80%, I want to say almost 90% of all worldwide transactions are settled in dollars. So, as we come to, key points in the market, key inflection points, different things happening, it's not unrealistic to think that we're going to get this continuation of the trend. Histogram is below the slope line. It's angled powerfully to the upside. We're downside on the stochastics. Are we just getting like that reset? Maybe. We did hit the bullish control zone only for a second, just like we did back here, and then sold off to another lower high. So this thing could continue trending to the downside, could get a powerful burst to the upside. But as far as I'm concerned, when you break out of a channel that you've been operating inside of for this long, especially after, we always talk about when you go from the bottom to the top to the midline and then you get the break, it's typically going to see continuation and be a powerful break in that direction. So, I think 95 is very likely at this point in time. And you have to keep in mind too that no matter how many dollars we print, it's not just about the dollars that we print. It's about the relationship of our currency to the other currencies in the basket. So it's like 6 currencies, primarily the euro. So, while Europe is printing their dollars also, while they're printing euros and stimulating their economy, we are also stimulating our economy. And it's often like the relation between the two to each other, plus a bunch of external factors, such as like people are going to be factoring in the likelihood of, the United States recovery in relation to the Europe's recovery, the strength of the dollar in relation to the other ones. As the United States, because we're the world reserve currency, as we print dollars, we essentially force other currencies to print dollars as well. Because if our dollar strengthens, the cost of goods for other countries goes up. So if they want to buy our imports or settle in dollars, they have to transfer their currency into a dollar and then settle whatever, transaction. So as the dollar strengthens, other currencies, other countries suffer from that. So typically a strong dollar is bad for everybody else, but good for the United States because our buying power for buying other people's exports gets better. So we'll have to see. I mean, see how it all pans out. But it's interesting to keep track of the relationship between these things, as like now we essentially force other countries to move based on what we're doing. So when we go to print 1.8 trillion, theoretically it's going to weaken the dollar because we're creating more dollars. So that's good for other countries. But if the dollar strengthens in relation to other countries' currencies, we can then buy more exported goods because it takes less of our dollars to buy more goods, and they can buy less of our exports, which we don't really have that many, but it's more about like settlements. So when they go to transfer their euros into dollars to make like an oil transaction, they get less dollars for their euros. So therefore, like if oil prices are in dollars, they're getting less oil. So, if oil prices are going up and the dollar is strengthening and the euro is weakening, they get double hit because oil is more expensive in dollars, plus they're getting less dollars for their euros. So it's basically like a double whammy. So that's why the strength of the dollar is exponentially important, in relation to other currencies. So now switching over to gold right here. Gold is in a similar chart. We're in that descending channel right here, printing consistent lower highs and lower lows. We got that fake breakout. Couldn't maintain it. Sold back inside the channel. As far as moving averages, we're getting saved currently by the 200. I like to see the first time we come down to it, a powerful move off of it, and then the next time we come down to it, an even more powerful move off of it. If we don't see that, if we see it come up here even and put in another lower high, it's going to look extremely weak. But this bounce right now looks terrible. We couldn't get the cross back above on the 821 on the daily. Couldn't maintain the cross above on the stochastics. So it looks like at this point in time, we found support, and then got rejected now. So previously we were finding support on the 200 simple. Now we're getting resistance on the 200 simple. And we have essentially lost the slope on both the exponential and the simple. And we're below the 8 and 21. So on a daily, this to me is starting to show like a downtrend, legit downtrend. And we're already operating inside of this downtrend channel, and have been for some time now. So, from the actual top, this is a clear downtrend, obviously. So at this point in time, the target to the downside is going to be the bottom of that channel. And that like low 1700 gold is looking extremely likely. We did exactly what I said. Got the exact bounce off the heart line of this channel. So, are we going to come down here again? If we take out, we had this low, then we came down and put in that higher low. If we break through that higher low again and come down below 1800, the next target is going to be that double bottom right here. And that's going to line up perfectly, with the heart line of the channel, which is 1771. At which point in time, I would expect this to act as resistance and then potentially get that move down as low as 1700. So need to pay attention to this. Gold is definitely looking weak. And if we break down from this area, we're going to have to start looking at some of these Fibonacci targets and a legit correction in gold, which long term, gold is like inversely correlated traditionally to the stock market and stuff. But if like what happened in March, we got a powerful sell-off in the markets and then gold breaks down from a key level, that would correspond with some of our targets and then also the fundamentals and technicals as well. So let's look at silver now. Again on the daily, I'm going to turn off the moving averages real quick and let's look at the patterns that we have taking place. So we basically been operating inside of a sideways channel like I spoke about. We had a high, a low, the same low, came back all the way to that high again. So now we have 2 touches on the bottom, 2 touches on the top, and we're inside this channel, just operating, going sideways. And then inside of that channel, we had the triangle. We got the first breakout of the triangle, hit that measured move, topped out at the second top of our triangle in red here, came down, found support on this blue line here, came up, got the majority or finish off that measured move, and then touch the top. That was also a fake breakout of that red resistance there. Now again, is this thing just slightly off and we're inside of it again? It could be. Depends how you look at it. It sort of looks like we came up to the top here, got rejected, came up, broke out, couldn't stay above it, came up, got rejected again. So, this looks bearish to me once again. We couldn't maintain that move. We got almost no follow through, but we did put in a low, a higher low, and then potentially going to come down here and put in another higher low, bounce off of, this is the heart line in green right here of the channel, and then get another move up, come back up, test the top of the channel and break out potentially. But again, this thing is typically corresponding with gold, although it is showing a little more strength, or definitely more strength than gold. Gold is like in a descending channel. Silver is in a sideways consolidation channel. So it's definitely looking more bullish overall. And it did get a retest of the all-time high recently, which is good as well. But again, not looking great here. And, potential to break down from this area, going to take us back to like one of these key fib levels and that support at $24, or potentially back down to the bottom of the channel at like $22.50. So need to pay attention to that. We do not want to break down from this channel and get our measured move. We definitely want to get a breakout to the upside, but we need to pay attention to what the charts are telling us, what the market's telling us, not just what we want to see. And then if we turn on our moving averages, you'll see, in a nice uptrend on the moving averages, still well above the 200 exponential and simple. Both are powerfully angled to the upside. We are still above the 8 and 21, still cross to the upside. All the moving averages are in order. So again, silver looks more bullish than gold does. It's possible that we see silver do something like what platinum's doing right now and copper's doing right now, and it just decouples from gold at least temporarily and continues to the upside. And fundamentally, that would make perfect sense. We've talked a million times about how important silver is, and how like the Green New Deal and basically like all future technology leads to silver, points to silver, and its overall importance. So silver is definitely looking more bullish, but I wouldn't get too excited on this thing yet. Not sure I want to get in here and start paying like $11 an ounce premiums. Almost 50% premiums. It's at $27 right now. And, like Silver Eagles are selling for like upwards of $38 and $40. You can get like silver bars or rounds for about $33 right now. All come back into stock and everything. That's still a high premium. I mean, premiums are typically like $1 to $3. So you're looking at like basically like 2 to 6 times the typical premium. While silver does look good overall and has good fundamentals, I'm not seeing it in the chart right now to make it worth paying those massive premiums. And typically with silver premiums, everybody wants silver all at once. Premiums go through the roof, and then they kind of just drop back down to normal, and everybody forgets about silver. And then next thing you know, everybody forgot about it. It gets another powerful move. Premiums go through the roof. It happens like that all the time. Last time, when you hear people say like last chance to buy, silver is going to be unaffordable and unobtainable in the future and all this stuff, ignore that junk. That's FOMO crap, okay? Because if you can afford ounces of silver at $27, you can afford ounces of silver at $33 once we confirm a breakout and start moving to the upside. That $6 is not going to be the difference between whether or not you can afford it, obtain it, whether it's going to be available again. So that whole FOMO thing is a joke. I would rather buy something after it breaks out when it's in a powerful uptrend than, buy something because I'm FOMOing in because I'm afraid I'm not going to be able to get it in the future. So TLRY, boy, I'm not going to lie. When I spoke about this thing and I was telling you about TLRY, it was at $26. In the last like 3 days, it shot up to $66. I was not expecting that when I was saying I'm in TLRY. I did not expect that. It's still up like 10%. It's at like $30 right now, but from what I understand, this had something to do with like the Reddit raiders, the Wall Street Bets community, whatever. Once again, I think the fundamentals and technicals look great on pot stocks, but I mean, that's obviously an unsustainable move. This is why I hate pump and dumps, is people legitimately get into these things along the way and get completely wrecked. Somebody bought up here at $65 and is already down 50%. This thing is way up off of its lows, which is great. It was at $250 back in March, which is obviously way undervalued. But, it's over 10x since then. And when it was up here at $60, it was like basically like 25x from its lows. But as far as I'm concerned, overall, 200 is angled to the upside. 200 simple is angled to the upside. Once price action was back above it right here, we gapped up above it and then got powerful moves since then. I was at $10. I'm not saying we have to come back down here and fill this gap, but it's not unrealistic to think we could come back down and retest the 200 moving averages, which would bring us back down to like the 382 from the top to the bottom. So, I think $15, $16 is still in the cards for this thing. I don't think it's a good idea to just get in this heavy all of a sudden, like at these high prices or anything like that. And typically, like a reversal move, when you see a big push up like that and then it sells back off, usually gives back like the whole move. So, it's not unrealistic to think we're going to come back down here somewhere in like that $15 range and retest some of these moving averages, retest these Fibonacci's, find support, and then get continuation. So, but, I'm not a seller of this either. I take some profits along the way when I see a powerful move like that. But, I'm not trying to get out of this thing. This to me is, if you count right here as the beginning of the bull market, that was literally the beginning of January. So, we're a month and a half into the bull market. As far as I'm concerned, this thing has entered a bull trend, a bull market. Typical commodity bull markets last for like, 8, 10, 15 years. So 1 month into this thing, I'm definitely not looking to get out of it. What type of gains are we potentially looking at? I mean, I don't know if it's going to come right back up and retest like all-time highs anytime soon. I think this thing was in a bubble itself, like most of the pot stocks were. But, essentially we're looking at $296. This thing was at $300 for its all-time high. So, next target to the upside would be the 786 at $107. Then the 886 at $172, and then retest the all-time high, $300. This thing's definitely got some potential to move. And, when you look at, it was in a bear market from back in the end of 2018, so it's not unrealistic to think that, after a 2-year consolidation sell-off bottoming pattern and everything, that now, like over the next few years, we're going to come back up here and, retest those highs and then typically break out from them. So definitely some potential in, this and the other pot stocks for long term. I like TLRY. I think overall it's more powerful. People are talking about essentially Canadian companies are able to be traded on the United States Stock Exchange, but American companies are not because cannabis is not legalized. While I think that they will decriminalize it in the near future, I don't think it will be legalized anytime soon. So I think Canadian stocks are still going to continue doing well, and it will be some time before American stocks are available. Could be wrong on that. Things could change with the Democrats in office and everything. But I think overall Canadian stocks are going to do well. Pot stocks are going to do well. Some of the other ones as well, like I think are good, but just less powerful. Like Aurora it had a similar move to this, but the move up was much less powerful and the move down was like equally powerful. So, I always go with like the stronger ones. And, Aurora had all that crap go on, and then the stock, they got absorbed and their stock dumped, and I think it's better to stick with the more powerful like winners in the sector. Like, I don't want to be in MySpace. I want to be in Facebook. I don't want to be in Bing. I want to be in Google. Like, I don't want to be in like the second highest performer. I want to be in the best performer. So, that's why I look at these, with the exception maybe of cryptocurrency, like percentage-wise gains. Some of the other cryptos are great. Ethereum might have better gains percentage-wise than Bitcoin, but in my opinion, like Bitcoin is the first mover. So now switching over to Tesla. Tesla is looking weak here. I imagine probably Elon will put out a tweet soon and try to save this moving average cross. Would be interesting to see what happens, but essentially we had like a top out here at, obviously right here at $898. We very clearly like topped out. So what's going to happen now? I mean, we could sell back off to a key moving average, find support at any one of these, and then get continuation to the upside. But the last time we had the 8 and 21 cross to the downside, when we topped out here at $500 and then sold off like pretty violently, we were able to save the cross all through here, and then finally lost the cross, but it essentially like bottomed out right there. So could we save the cross right here and not lose it, or lose it and then, find support? Definitely. I think target wise, 740, 707, 655, 611, any of those are like key target levels. But that's a pretty hefty pullback here. If we can't save this moving average from where we're at right now, I think anywhere in the like 10 to 25% range. Looks very likely. We've had a ton of red histograms in a row. We are below the slope line. We lost the blue on the slope and it's now red. We are in a powerful downtrend on the stochastics and they're getting stronger. The purple is in a very powerful downtrend. The blue has tried to save it once in the bullish control zone, got the hard sell, exited the bullish control zone, tried to save it again, got rejected, and is selling off. Tesla looks bad right now. We are putting in potentially like some kind of bullish divergence right here. If this thing turns around and starts going to the upside, it could definitely turn it around and look good. But as far as I'm concerned right now, we're potentially going to cross the 8.21 to the downside. If we don't get back above 8.25 very, very soon, we're going to get this cross and, we're going to potentially see like bots and algos flip, at which point in time, like that 740 range looks real likely, which, is essentially like about a 10% move, which in traditional stocks, a 10% down move is big. And, fundamentally, I mean, Elon's spreading himself awfully thin, in my opinion. He's tweeting about Bitcoin, he's tweeting about Tesla, he's tweeting about Dogecoin. And the more he pumps these things up and the less effective it becomes, he's basically like spreading himself too thin. And that's never a good thing. And, I think the move of Tesla to put a bunch of their like cash on their, into Bitcoin on their balance sheet, I think that's a mistake. Investors invest in companies because they want to see that company grow. They want to see them use that cash for growth, for building factories, for like innovating technology. You don't buy into a company because that company is making investments. Tesla is a tech company. It's a car company. It's a green energy company. It's a lot of different things, but it is not an investment vehicle. Something like MicroStrategy that's just like a shit company that nobody cares about can turn their cash into Bitcoin and then essentially just become like the equivalents of they're like Grayscale. Nobody's buying MicroStrategy for like what they do. Everybody's buying it because it's a way for them to legally get exposure through the stock market to Bitcoin. So that's essentially what I look at it. It's like a Grayscale, a Bitcoin trust. No one's buying into MicroStrategy because they're making cool stuff. They're not making cool programs and chips. Like no one's paying attention to that. So what works for, what's good for the goose is not always good for the gander. People buy into Tesla because it's a car company. They buy into Tesla because it's an energy company, a tech company. They expect them to use the cash on their balance sheet to grow their company, build factories, build cars, all kinds of stuff. I don't think using something that's already in a bubble, which you can argue against Tesla being in a bubble, but to me it's clearly in a bubble. I'm not saying that it's not going to be worth this amount in the future. It's definitely going to be. I think it has huge long-term potential gains and everything. But right now, in my opinion, this thing is in a bubble for sure. So using your bubble money to buy into another bubble, which again, you could argue with me as much as you want. I think Bitcoin's definitely got huge upside potential, but it's clearly in a bubble right now. So if you say, I'm going to use this bubble to absorb another bubble, well, if either one of those bubbles starts to pop, if Tesla starts to sell off, that's bad for them. If Bitcoin starts to sell off, that's bad for them. If Tesla and Bitcoin both start to sell off at the same time, it's double bad for them. So I do not think that was a good move. I think a lot of traditional investors and people like big money investors are not ready for Bitcoin yet, don't like the idea of your operating cash to be in Bitcoin. So I think a lot of people probably look at that as a bearish thing. We'll see what happens. Maybe I'm wrong. Maybe people are like way more into Bitcoin than I realize. But I don't see a lot of the traditional guys like too excited about this. I'm not sure how most Tesla people, I think probably if they're into Bitcoin, own Bitcoin also. So I don't think they want to see like extra diversity like gone and moved into Bitcoin. And $1.4 billion of your balance sheet, I think he said 8% of Tesla's like cash. 8% is a lot. I don't know what their operating expenses are. I don't know how much of that they use on a regular basis, but that to me is a big investment on their part into, something that's already overpriced or high up. If they did it when it was at $4,000 or $6,000 or $8,000 or $10,000, it'd be a different situation. But, after a parabolic run on Tesla and a parabolic run on Bitcoin, I don't necessarily think that was the best move. I'd like to hear your opinion in the comments. Maybe I'm wrong. So now switch over to Dow Jones. basically making all-time highs, consolidating at all-time highs, broke out from its all-time high, found support, looks good overall. In the bullish control zone, the only thing I'd be paying attention to is we did lose the slope, got that sell-off, got the histogram come back up. A lot of times the histogram will get rejected again on that slope line. So we have that red slope line now, downtrend slope line. We are, below that, potentially going to get rejected here, at which point in time I would have to start paying attention to the divergence, as we had like the high here on the indicator. We have a lower high here if this just started rolling over right now. So we would basically have a high here, and then in price action we have a higher high here. On the oscillator we have a lower high here. On price action we have a higher high here. On oscillator we have a lower high here. That to me is triple bearish divergence. So it doesn't have to play out right away. Doesn't have to play out at all. We could easily break above this point and get a powerful move to the upside. But, to me right now, this, looks like a potential for a big sell-off to happen. Because, when you have a high, a lower high, and then you get a third lower high like that, that definitely is bearish divergence. We could come all the way back up here, to this level, like the 260, 270, 280 level, and it's still could sell off from there and be bearish divergence. And typically like the third drive is when it fails. So we'll see what happens. I don't like to call tops on these things. We could keep going on these forever. But I think already probably Biden's stimulus deal is priced in. So we'll have to see what happens. On the Russell just had a nice move up. Very powerful move. New all-time high again. Got back above that point. So, this is not going to be the same. We basically have a high back here. We have the same high here. We have the same high here. So we basically have 3 times the same high and prices. So again, that could potentially develop into bearish divergence, triple bearish divergence. So again, 3 drive bearish divergence, not ideal. Let's see what happens through this area. We've obviously been oscillating inside the bullish control zone. And, when we got the last sell-off out of it, it was a puny little sell-off. When we got this little sell-off out of it, once again, puny little sell-off. You're looking at basically from the high to the low 5%. So, it's not enough to get worried about something like this. But, if we start selling off below this and started seeing like, consistent lower highs and, potential cross of the 8 and 21, I might get worried. But, this is basically just money switching into the small caps. It's the same as everything coming out of the main index funds, going into the smaller index funds. It's the same as money coming out of Bitcoin and going into like the smaller cryptos. This is just like an index fund of a bunch of smaller cryptos. So this thing I think is probably one of the more bullish of the traditional markets. Next we have the Nasdaq. Topped out right here, got a powerful sell-off, came back up, basically got rejected at that same level again. We're still on top of the 8. There's no reason to think this thing can't keep going to the upside, but we have to be careful. This is starting to look like a double top. And again, we have massive divergence here so far shown off in the indicators. Took a ton of energy to get up here that time. Took barely any energy to get up here this time. Clearly rolling over. We're at that slope line, potentially about to lose it. If we go down below it, stay below it for too long, it's going to flip over red. And, this divergence is going to play out. And this is going to look like a very powerful double top. At which point in time, I would expect us to come down here and put in a lower low. Start getting violent sell-offs potentially. Again, same thing here. Ton of energy to get up here this time. Barely energy this time. Here we're in the bullish control zone, got the hard sell out of it. Here we couldn't even get back inside the bullish control zone. We could easily bounce this and continue to the upside, but definitely some signs here, that these markets are getting real tired. And same deal right here on the S&P, a high, a lower high, same high. Are we going to continue up here? Because we have a high, a higher high, a higher high. Excuse me. God bless me. So, definitely a couple things to pay attention to. Hard sell out of this area. Hard sell out of this area. Back up at that top resistance line. I mean, we're real high up on this thing. So, I can't imagine a ton more buyers coming in at these levels. I was expecting us to get up to 4,000. We broke out from the top and hit the 1.236. Could we make it up to the 1.382 and hit 39.41? We definitely could. We saved the cross to the downside here, found support on the 50-55 and got continuation. But we really got to be watching these things because, you know, there's a lot of alarming things. All the indexes are looking like they're potentially topping out. The dollar and the treasury are looking like they're bottoming out. A lot of commodities are showing clear signs of a bull market. Stocks are in a huge bubble, melting up for like basically like a year at this point in time. You know, typically what happens is stocks go way up, get like these massive moves, and then all of a sudden everything, like inflation, starts to show up in commodities. You know, silver, copper, you know, uranium, all kinds of different stuff we're seeing. Sugar, soybeans, wheat, rice, cattle, pigs. There's a lot of things that are telling us this might be like a reversal in, you know, stocks and a continuation in commodities. So got to be real careful here. And, you know, that commodities prices moving up is basically like the first warning sign of inflation. So what does that tell us? We're likely going to be getting, you know, inflation in the future, which the Fed says it wants. But I think it needs to be careful what it wishes for, because I think it says it wants inflation and it's doing all this stuff to get inflation. But I don't think it really wants inflation. It's never been able to functionally get inflation. And if we do get inflation, you know, and interest rates do start to rise, that's not good because we can't service our debt. We're going to see a lot of zombie companies that can't service their debt, defaulting, and, you know, tons of these bonds, like high risk bonds, defaulting in a bunch of these companies because they can't service their debt, and essentially like zombie companies just rolling over and dying. And that's exactly what's been happening in China in the last couple months. So we need to really pay attention to this stuff and be real careful here. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, nice in-depth short video. I knew it was going to go long. I set my goals big for a bunch of stuff and probably got ahead of myself. So there you have it, guys. Crypto Trend Trader. Make sure you like, subscribe, share. I do appreciate all the comments lately, especially all the positivity, guys. Appreciate it. Helping me grow the channel. Helping me bring back these videos. Crypto Trend Trader, and I'm